This episode is brought to you by Sumsub. As crypto continues to go mainstream, the industry is facing a new wave of challenges. AI-generated fraud, compliance pressure, identity theft, and increasingly sophisticated scams. In fact, Sumsub recently released a crypto report for 2026 covering these challenges in detail. Inside the report, Sumsub analyzes millions of fraud attempts and shares insights from hundreds of crypto companies around the world to reveal where the industry is really heading next, including trends in KYC, AML, onboarding, regulation, and institutional adoption. If you're building in crypto, investing in digital assets, or simply want to understand the future of the industry, this report is absolutely worth reading. You can download the full report for free right now. The link is in the bio below, sumsub.link/LES, and you can check out Sumsub at sumsub.com. What's up, guys? Welcome back to another episode here of BlockHash live at Rare Evo here at the Aria in Las Vegas. First interview of the event. We have Joe. He is the Chief Commercial Officer for Stable, here to talk about what they are doing, what they're up to, and what they are building here for the industry. So, Joe, welcome to the show, man. Pleasure to have you on. How you doing?
Yeah, thanks, Brandon. Great to be here. I'm doing well.
Likewise. Maybe to kick it off, tell us a little bit about yourself and your background. I'm sure everyone would love to know a little bit more about you and how you kind of got into this industry. So what's your story kind of like?
Yeah, so I spent most of my career in traditional finance in New York, running around Wall Street in Manhattan, and that's kind of where I cut my teeth. Initially working in sort of a regulatory capacity and then in an operational capacity at some of the bigger investment banks. I then went on and went out into more sort of a client-facing role in Silicon Valley, and there I was surrounded by this energy of crypto, and that was what drew me there in the first place. And had an opportunity to step into a BD role at Ripple, where I ran their central banking business for several years, and then ultimately ran BD for their stablecoin, which we took from inception to launch. So that was really a 0 to 1 project. Subsequent to that, I stepped out into STBL, where I'm currently the Chief Commercial Officer, and I work alongside the founding team on what we describe as the next generation of stablecoin infrastructure, which I'm excited to tell you about. So that's sort of a brief narrative. Started my career in the Navy, in the Submarine Force.
There you go. With Stable, what type of infrastructure are you guys building? What does that look like?
Yeah, so maybe I'll just give you a high-level view on the market itself, and
Sure.
and I think we're sort of at an inflection point over the last decade, really since Tether came along and tokenized the dollar. There's been one stablecoin model, and that model is a user provides the capital to a centralized issuer, Tether, Circle, name your well-known brand company. They take that, they buy a treasury, they keep the 4% for themselves, whatever the rate is, and they give you your digital dollar. And so you get the utility of a stablecoin, but you've given up all the yield. That's been the model. That is the known sort of model to date. I think that's changing in real time, partly driven by regulatory forces that are evolving rapidly right now between Genius and Clarity. And then secondly, by market structure. And by market structure, I mean the advent of tokenized real-world assets and treasuries coming on chain. And then finally, the technology has matured. And so a lot of the tooling that wasn't available, a decade ago is now functional and useful. So with that background, what we see is an inflection point in the industry where we're going to be moving away from the centralized issuer model and really putting the individuals, the users of these stablecoins at the center of the economics. And what that means in our protocol is an enterprise can buy their own tokenized treasuries or money market funds from a selection that we've pre-approved, so really high quality collateral. They can mint a stablecoin against those assets. Our stablecoin is USST. It's a Genius compliant stablecoin. And And so then they get their dollar equivalent principal value, just like USDT. And they also get to keep the yield on their underlying reserves because it's actually, those are their assets. And so now what they've got is the yield and the utility of the stablecoin. And we do that by separating the principal of the asset from the yield component. An analog in traditional finance is treasury strips, where the coupons trade separately from the principal. And so we have taken that, we put it on chain, and we think that is a novel model that will, it's showing a lot of market interest because people are recognizing, I don't have to give up all the yield to these third-party rent-seeking institutions. I can keep it myself. And beyond that, they get the data. For the first time now, they can have the data on how that value is moving through their ecosystem. So they can use USST if they want, our stablecoin, or we enable them to white label their own version of a stablecoin against a select basket of pre-approved collateral. And we've got some great examples of projects we're doing right now with major companies in the space.
What do you think is the biggest differentiator with USST and maybe other stablecoins out there like Tether and USDC? Is that separation from principal with yield like one of the big factors, or what else would you say kind of separates it?
Yeah, from a philosophical standpoint, I mean, I think our vision for the space is just entirely different. We have this idea that, the idea of blockchain is that it's faster, cheaper, and can reach the masses. If traditional finance could have done that and made money doing it, they would have done it. It hasn't been done to date. And so what we're saying is, let's start empowering the users of these assets. Instead of accruing all the value to a third-party entity, why not share that with the participants using these assets? So that's kind of the philosophical difference. We're just coming from a different place. From a technological standpoint, yes, the separation of principal and yield is very powerful. The yield is infinitely composable. So an enterprise could take that yield and do whatever they want with it. If they want to launch new products and services, if they want to have, for example, a loyalty program, or maybe you're a gaming company, you could use that to introduce any number of incentive mechanisms or just treasury management strategies that you didn't have before. And then you get your stablecoin as well. So this is an entirely different model than the incumbent model that's the most sort of common structure.
You mentioned Genius a little bit ago. Genius has really helped usher in, I think, stablecoins and infrastructure for stablecoins over the past year. Clarity is just around the corner, hopefully, fingers crossed. What does stablecoin infrastructure kind of look like so far today, and where do you think it's kind of heading right now? It's very institutional at the moment. Maybe we'll see some ripple effects with retail, but just in terms of what the infrastructure looks like, what does it look like today?
The infrastructure today is, everything, technology evolves, and I would say it's sort of an analog architecture. It's reliant on traditional banking rails. A lot of people don't know this, but there are probably about a dozen banks globally that support and prop up the entire industry. And that works. It's almost like a Rube Goldberg machine. You have different cutoff times. So you have to make sure you have different banks in different time zones that can move money. There are different correspondent networks, onshore, offshore correspondent banks that are critical to making sure there's sufficient liquidity. All the assets are custodied or sub-custodied in traditional banking environments. And so that's kind of the infrastructure to date. And that's changing very quickly in real time. And a lot of that is being driven by all these assets coming on chain. So when you can get exposure to tokenized treasuries and money market funds, the same Genius eligible collateral that's sitting in a banking infrastructure is now on chain, and you can buy that directly. That's an entirely different architecture now that you have an opportunity to leverage that you didn't have before. Those assets and the RWAs, as everybody knows, they're only getting bigger, and the stablecoin market is only getting bigger. And so we think the technology and the market structures, as I mentioned, have evolved to enable these new business models. And in a world, in a post-Genius Act, in a post-Clarity Act environment where users can participate in the economics, they're going to insist on it. And the business models are going to have to enable that.
Time for a quick shout out to today's sponsor, Sumsub. Crypto is global, fast moving, and full of emerging threats. You need a verification partner that moves even faster. Sumsub combines blockchain intelligence, identity verification, and behavioral fraud detection into one powerful platform. You can screen, score, and monitor users at every step. Their AI-powered system detects anomalies, account takeovers, and illicit wallet activity before transactions hit the blockchain, giving your compliance team superpowers. Trusted by 4,000 plus clients across fintech and crypto, Sumsub helps organizations expand into new markets with confidence while maintaining full compliance with global regulations. Whether you're scaling an exchange, launching a DeFi product, or securing a Web3 community, Sumsub has you covered. Check them out at sumsub.com.
Yeah, institutional adoption of tokenized RWAs has been growing tremendously. Yet retail is still kind of like sidelined when it comes to, I think, like 3% or something like that is available to them.
There's a big challenge, that I think is well understood in the industry, but not solved for. And that is a lot of these permissioned assets. You need to be an accredited investor to access a lot of these positions. And so at the moment, it's really not a retail market. But the beauty of a stablecoin that's on chain is giving utility and liquidity to these assets. And that's what USST is designed to do. We mint against these permissioned assets, and then the stablecoin can move permissionlessly. Now, in order to mint and redeem, you still have to be whitelisted. You have to go through the due diligence and the KYC process. But the killer app for stablecoins, aside from payments and everything that we know about, is really giving utility to these tokenized assets. And that is, I think, the next major story that's going to play out.
Is that another area where stable kind of comes in?
That is exactly where we sit. We sit at the nexus of RWA and stablecoin infrastructure, and we think that's a huge sort of the Venn diagram. The opportunity set is massive.
A growing term over the past year or so, programmable money, has been making the rounds. We've done a couple episodes with Coinbase and Grayscale kind of talking about this at length as well. Seems to be growing in consensus around the industry as an important evolution for stablecoins, but just in general, how we look at how we program certain things into money, everything from AI to institutional to accounting to regulations. What does programmable money look like to you guys, and where do you kind of see that heading?
Yeah, I mean, we have a term we call money as a service, and that's really what we are building. That's the vision that we're building, is to enable anybody to have their own currency and for their own ecosystem, and that is a version of programmable money. Now, interestingly, you mentioned the Clarity Act, and that's playing out in real time. We'll find out whether there's a motion and a vote prior to the August recess. Section 404 of the Clarity Act defines or sets restrictions on yield and rewards on stablecoins. Specifically, it says digital asset service providers and their affiliates cannot provide rewards simply as a function of holding a stablecoin. Obviously, that's being driven by the banks who rely on a fractional reserve model, and they see these rewards as a threat to their interest structure, the interest model that they currently have with their clients. The implication there is that we're going to move from a market that is a hold to earn to a use to earn. And there's a massive space there for programmable money. And what that looks like to me is really agentic AI-driven activities that will be defined and permissible and approved by the regulators. And that will be the vehicle to start generating yield on these otherwise idle assets. So I think in the next sort of version of programmable money, we're going to see a lot of opportunity around yield generation, yield sharing, composability, and a lot of it's going to be driven by AI, which enables this now to happen at scale.
What do you think about the agentic economy or agentic commerce? Number of different terms for it, but it seems like it's also kind of growing in popularity and probably is the future of how we kind of handle day-to-day payments and microtransactions and the minutia of daily life. But it's coming very fast and everyone seems to be working on it. How big do you think the agentic economy will be?
I think it's going to be massive. I mean, the whole premise of blockchain is that the value should be able to move as readily as information, almost like an email. And the sort of the innovations in AI, which are obviously not specific to crypto or blockchain or finance more broadly, they're changing entire industries in real time. And the financial industry will certainly be a part of that story. So I think it's going to be a massive economy going forward. It's critical that these tools are implemented responsibly, that they're implemented with guardrails, so people still have a sense of control over their money, over how it's being managed and moved, and that it can be verifiably and compliantly executed, that these transactions can be done in an auditable way. So if a corporate treasury or some enterprise wants to move value, and they've got some sort of, let's say it's a bank or a supervisory structure where they have to explain to their risk committees or their boards or their regulators, all of that needs to be auditable and verifiable. And those tools will certainly exist in the future.
Further on regulations, obviously we talked about Genius and Clarity's hopefully coming. The SEC also put out a statement that they're prepared to put out more guidelines as well if Clarity can't get through. Is there anything that's kind of outstanding that you think needs to happen in terms of regulation or some kind of guidance to kind of push this space forward even further that hasn't been talked about?
I mean, I think all of these things do get talked about. One of the topics, you could look at regulation as a global phenomenon, and it's a patchwork right now. And so, you have different jurisdictions doing different things, and sometimes they're harmonized, and sometimes they're not. But in order for value to move globally and seamlessly, regulations need to be harmonized. And that's a process that will take time. So a credit to the EEA who came out with MiCA, and now they're revisiting certain elements of that legislation to make sure it's harmonized with Genius. Okay, so these things are going to take time, and once those regulatory frameworks mature, I think that's when the opportunity set for global organizations to move value seamlessly will really scale.
Absolutely. So what brings you guys to Rare Evo? What is your kind of objectives while you're here? I know that you're probably speaking as well, looking for partners, folks to share with in the industry. What's your goal?
Yeah, all of the above. I mean, I'm looking forward to speaking tomorrow on some of these topics that we're discussing right now. It's got a great setup of a great agenda and some discussions. And then there are some very key, interesting companies here that we're excited to engage with and chat with. And so, as the head of the commercial business, I'm going to definitely spend some time, networking and meeting some of the other panelists and participants.
Do you know what those panel topics or speaking topics are?
Yeah, I mean, it's all on the website, but my topic will be around stablecoins and kind of this inflection point of the industry.
Awesome. And then where can people go to learn more about Stable if they want to kind of understand what you guys are doing in terms of stablecoin infrastructure and they want to follow your guys' progress and journey? Is the website the best place to go?
Yeah, it's a great starting point. We're active, that's STBL.com. We're active on X and Discord as well. So we've got, kind of the main outlets where we engage with the community and try to tell our story. And so, we're always happy to get feedback, and we love to kind of share the latest on what we're doing. We do that in a very thoughtful, recurring way, so everybody's aware.
Excellent. And then in terms of your guys' roadmap the rest of the year, is there any important announcements coming up or things you guys are working on people should be aware of?
Yeah, we have a really exciting product launch. It's already been announced. It's a partnership with OKX and Hamilton Lane, and we're going to be leveraging securitized assets to launch a product on X layer called RXUSD. We're in the final stages of the operational structure there with some really exciting developments. That should go live by late August, and we're getting tremendous pre-launch interest from the market. The numbers and the uptake and the inquiries and the wallet connects and everything have been far exceeded our expectations. So we're super bullish about that one. We have a lot of other announcements that are pending, and we'll follow the remainder of the year. So we've got a lot of work to do the second half of this year, but we've got now a lot of momentum going forward.
Excellent. Well, looking forward to it. We'll put all the links and everything in the description for the episode below. And if there's anything we should share with the audience, definitely send it over and we'll make sure to include it. But appreciate it. It's been a good conversation. And we covered everything from programmable money to stablecoin infrastructure to regulations in the space, obviously what Stable is up to and your guys' stablecoin. So appreciate the time, man. Enjoy the event and probably see you around.
Yep. Thanks, Brandon. Enjoyed
Awesome.
it. Cheers.
Cheers.